go ahead. It looks like we have enough people, correct? Mark and Josh Ingold will be joining us here in a few minutes. So we'll go ahead and call the Urbana Firemen's Pension Board Trustees meeting to order. We'll do a roll call roll call of who's present. Brian Hoff.
Richard Starr.
Elizabeth Hannon.
Mark Claps here.
And we have Clap. Thank you. Thank you. Okay, looks like the first order of business is our investment business by Busey, and they'll be giving their quarterly report. We have Thaddeus. Thaddeus, thanks for joining us.
Thank you for having me. Let me see if I can share my presentation. Hopefully, we did email it yesterday in case this doesn't work. You can start sharing. Okay. Does everyone see that, hopefully? And if not, I'll walk through the page numbers as well. So thank you for having us. Kevin and Aaron are out, so yeah, you have me for today. It's been quite a few quarters since I was last presenting at one of these meetings, but very good to see everyone again. Just right off the bat, we have a very nice summary slide that I think really covers most of the relevant information in terms of performance and market value. We'll say it's been a very volatile year. I would say we've had about a decade's worth of volatility here in just 2 quarters. Obviously had a very severe sell-off and drawdown in the first quarter, and then a very rapid and nice recovery here in the second quarter. So the pension portfolio ended the quarter with a market value of $34 million, a little over $34 million. As of yesterday, the market value was $35,788,000. So continuing to recover more value. So a gain of a little over $6 million for the quarter, and as of right now, the year-to-date investment loss is right around $70,000. So very close to recovering the losses, the entire losses from that first quarter. The portfolio did outperform the blended benchmark during the second quarter, a gain of 22.1%. Year to date, we're still a little bit behind that blended benchmark, which is dominated by the S&P 500 index, as the value-oriented strategies as well as the small cap strategies in the portfolio really sort of had worse drawdowns in the first quarter. And while every fund rebounded and had returns over 20%, that rebound wasn't enough to make up for some of the performance difference in the first quarter. Longer term, since 1998, the portfolio's had a return of 7.5% on an annualized basis, exceeding that blended benchmark return of 7%, so by a healthy margin of about 50 basis points. Largely attributed to those actively managed funds, the Contra Fund, for example, and many of those other funds that have strong performance over the long term. The U.S. value strategies posted strong relative performance for the portfolio. So Dodge & Cox was up 20% versus the Russell 1000 index, value index, which was up only 14.3%. DFA U.S. targeted value was up 23.6% versus that 18.9% of the Russell 2000 value index. So as I pointed out, that blended benchmark, we use the S&P 500, which is a broad index, includes both value and growth stocks. When we look at the underlying funds that may have lagged so far this year, They are value-oriented funds. And when you compare them to investments following similar strategies, actually had pretty good relative performance out of those particular funds. In the international space, all four of the strategies, did well relative to their corresponding benchmarks. Dodge & Cox International Fund had a return of about 17.4% versus 12.8% for that value-oriented index or international index. The fixed income portfolio, which is managed internally by our fixed income team, had a return of 7.5% for the quarter, outperformed the benchmark return of 2.7%. And year to date, still a little behind. I think probably as of today, that gap is even smaller. So trailing by about 60 basis points as of the end of the second quarter with a return of 4.5%. Just a reminder that the benchmark maybe isn't the best match as we own entirely corporate bonds, and that benchmark is actually dominated by government securities, primarily U.S. Treasuries. Since the portfolio has had a return of about 3.8% on an annualized basis and has outperformed that index return of 3.2%. The sector weightings have shifted, and I did want to bring this up. So I think you're well within your policy statement, but it has drifted somewhat from those target values. So equity index fund is now 40%. I think notably the international component is smaller at 3%. So just given some of the deviations, you may want to consider a rebalance and getting right back on those targets. We do see a lot of opportunities on the international side, and also that wouldn't hurt to take profits from some of those large cap funds and reallocate into small cap, for example. So something that maybe want to consider. We certainly can rebalance to those policy targets. We can also generate a proposal so you can see exactly what those changes would be if you'd like to review those. We have a little bit more detail, and I would like to sort of just go briefly through the commentary. Certainly had a phenomenal quarter, which ordinarily I think would be, reasons to celebrate. But unfortunately, it's coming, on the back of a fairly significant drawdown in the first quarter. So very good, strong performance across markets, both domestic and international markets. What we have seen year to date in particular is that the more growth-oriented technology companies have been the ones that have been leading the way. So common household names like Amazon, Microsoft, Apple, Netflix, for example, those are the ones that have been really driving the index returns, that have been posting new highs, and really the ones that have been contributing to the performance that we've seen in the equity markets. We have seen more traditionally value-oriented companies continue to lag, in particular, financial stocks with the decrease in interest rates have lagged somewhat, as well as your more traditional industrial stocks, for example, have also been lagging. But again, a very good recovery. We've, in the quarter, actually, we've seen sort of retailers and cruise lines actually rebound significantly, but again, that's coming after a very severe drawdown. Those names are nowhere near where they started the year at this point. We have seen some economic data. I think in the second quarter, it was looking more positive than it is more recently. The recent GDP print showed a fairly significant contraction, but some of the early indicators are, I would say, mixed in terms of some of the survey data that's coming through. Unemployment, is also very high. And I think even today we're expecting to potentially see some fiscal measures out of Washington, either continuing or modifying some of the additional unemployment benefits that we've seen. International really has been the same as domestic markets, had a very similar drawdown in the first quarter, and then also a nice recovery here in the second quarter. We are starting to see a bit of outperformance in emerging and developing economies, and that is how in our model portfolios, our recommendations, we do favor emerging markets at this point relative to developed markets. I think fixed income is probably the biggest area of concern for us, and given your significant assets in bonds. While the decrease in yields has really helped the overall portfolio, has led to very good returns here on a year-to-date basis, that decrease in yields has really made it difficult to earn interest and returns going forward. So as of right now, I think the 10-year U.S. Treasury is around 0.56%. Close to record lows there, and really imply future returns that are very, very low, particularly for those higher quality securities. In your portfolio, in your bond portfolio, we are purchasing corporate bonds. Recent purchases have been higher quality financial names where we are able to get much more yield than the Treasury market. But even there, we've seen spreads continue to tighten. And for example, some of these financial names barely yield over 1%. So even in the corporate market, we are seeing the effects of these very low yields, which will make it, like I said, very difficult to earn interest going forward.
Thaddeus?
Yes.
Earlier you had mentioned that perhaps the benchmark for that portion of the portfolio isn't appropriate necessarily or needs to be looked at. And if so, are you prepared today or maybe at the next meeting to propose a different benchmark?
So the benchmark we are using is the most common benchmark for an intermediate strategy. There is a corporate intermediate strategy, and it's probably good. I don't know if we need to change the benchmark, but I think it would be good if we report those the corporate benchmark maybe included in, I think we have a list of benchmarks that we prepare and can include as well. The corporate benchmark is not a standard benchmark that we use, so I think it is very difficult to actually change it in the reporting that we do, but I think it is something that we can include in that supplemental data that I'll point out here in a little bit.
Okay, great, thanks.
Just a nice summary report that shows the long-term performance. So again, since inception, performance of 7.5%. Always nice to see the market value grow significantly, even with recent withdrawals from the account. And not quite to that high watermark, but again, a nice recovery here in this last quarter. Very, very strong performance. A lot of it having to do with some of those active funds, as well as the healthy weighting to larger U.S. companies. It's hard to imagine how much better you can perform than what we've seen here in terms of the consolidation of these pension accounts, or the pending consolidation, I should say. Similar, this shows the time-weighted performance, so not the account value, but the performance, the time-weighted performance of those assets over time. So you do see the effects of the drawdowns that we have seen, but again, strong performance, particularly here in the past decade. Mix of investments oriented towards U.S. equities, but some exposure to international stocks through those funds. And then we do have the international bond allocation, the two funds there.
I'd like to go back to the prior graph and just have a question.
Sure.
My recollection is that a lot of stocks were somewhat higher than it should be. And so a lot of people thought that there would be a drop in the value of stocks. And, just to get back maybe a more true area. So I wonder whether, while this happened a lot because of the virus, but would that maybe happen at any way, having a come down by 5% or something of our stocks? Do you have an opinion about that?
So much of the rebound has been driven by very few stocks. So when we look at the contribution to the performance of the S&P 500, for example, or even this account, some of those growth-oriented, in some ways monopolistic stocks, so like Microsoft, where you really don't have a choice but to use Microsoft, Amazon, for example, which dominates online retail as well as their web services group, Apple, who certainly faces a lot of competition, but has a very strong niche in their ecosystem and then in their mobile phones in particular. Those are the stocks that have been doing extremely well and supporting the index. Financials, for example, I think are still off 15% from where they started the year, despite the recovery that we've seen here recently. So if you looked at, for example, the median return versus the average return, the median return is going to be much, much lower than the average return that we've seen, because the index return has been dominated by those names. Now, price appreciation, I think in Amazon certainly, for example, is justified. It has, if anything, the pandemic has accelerated the trend towards online shopping, but the performance we have seen has been in excess of what we would anticipate that sort of tailwind to provide. And so we are seeing particularly growth-oriented stocks the valuations looking stretched, which may result in not necessarily a pullback, but maybe lackluster performance going forward. So we've been, when we manage individual stocks, we've been somewhat reallocating from those types of names that have benefited and trying to find names that we think will do well going forward. So there still is opportunities in equities. Maybe now is a time to be more selective, particularly to protect against some downside risks from drawdowns. But I think the other major thing that has been influencing stock returns really has been the lack of safe alternative investments. So historically, if you could invest in bonds and earn 4% interest and meet your goals, there really is no reason to buy stocks at elevated levels. Here we are in an environment where even if you consider valuations are above historical norms, the dividend yield is still close to 2%, a little less than 2%. And so you compare that to a 10-year treasury, which has income of 50 basis points. For a truly long-term investor where income is what drives return, stocks still would make sense, and allocating to stocks would make good sense. If not for any other reason than the alternative, being fixed income or bonds, would almost guarantee a lower, at least income component of return over any measurable period of time. Now, that's not to say that a drawdown can't happen. And we saw how quick drawdowns can occur in equity markets here in the first quarter. Certainly wouldn't say that couldn't repeat. I don't have a crystal ball. If I did, it wouldn't be very accurate in terms of what would drive a drawdown. We certainly didn't anticipate a pandemic coming into this year. But those drawdowns is just one of the inherent risks of equity investing. Would be that we could have another 20% plus drawdown in the stock market. But aside from that, what we haven't seen is a drawdown or a significant change in income. So certain companies certainly have had to cut dividends. Airlines, for example, aren't going to pay dividends this year. But most companies will have continued to maintain their dividends. We probably won't see the dividend growth that we've seen over the past several years, but that income, for the most part, hasn't changed much, and we wouldn't anticipate too much of a change here unless we do have a very prolonged economic slowdown and a long recovery, for example. But for the most part, that income component of return, which drives long-term return, is still there. It's not as attractive as it was, but I think the biggest challenge is if you don't own stocks, really the only alternative is fixed income, which the Fed and our monetary policy has intentionally made very, very unattractive. So in a certain way, or to a large extent, these high equity valuations are largely justified at this point.
Yeah, thank you. And I do
That's
think,
probably more than you wanted. We're looking for it, but that is the real challenge that pension funds, individual investors, really any investor is facing today, is these hard choices about lack of return in traditionally safe investments, and then the inherent risk associated with the stock market.
yeah, I think we should stick with it.
Yeah. Now, what I did mention earlier is there is an opportunity, I think, to consider a rebalance, which would sort of sell winners and buy some of the losers within those equity markets. So if we were to do a rebalance back to those, right in line with those policy targets, that would sell, that S&P 500 index fund would likely get trimmed, and you would be reinvesting into the small cap index fund, for example, and then also potentially some of those value strategies, which have lagged here recently, but may have better opportunities going forward.
Mhm.
Let's see, where were we? Here it does show some of the segment blended returns. Let's see if I can move this way. To see where the strength has been. So really strong performance for the quarter across all segments. So U.S. equities 22.8% versus the S&P 500 at 5%. International above 20% versus that ACWI US index at 16.1%. International bonds 14.1% versus the benchmark at 11.3%. Really, all segments of the portfolio performing very well, and largely making up any sort of gap that there was for the first quarter of the year. Moving on to here it does list the assets. You can see some of the top holdings here in terms of market value is that S&P 500 index fund, Fidelity Contra Fund, a very strong performer, a long-term holding for the fund or for the pension account, also right at around $6.5 million, and then smaller allocations to those small and mid-cap funds.
Hey, Dad, I was going to mention that Fidelity Contra Fund was such a good performer.
Yep.
I'm talking about from the period July 1 of 19 to June 30 here, 20, which is our fiscal year. That was up 17.5%.
Yep.
Including the cash dividends, and that, because it's such a large holding, $6.5 million, that was enough to bring our entire equity return up 2% just for that month.
And really, it's not just over this 1 year period, but that fund has performed very well. It's been a long-term holding in the account, and has done well, really, since it was purchased. Now, Fidelity is one of those funds that is more growth-oriented, so this has been a very good environment for them. Their top holdings are those names that I was describing, so Amazon, Microsoft, Netflix. But even beyond that, this fund has been a very strong performer here recently, but then also, like I said, since it was added to the account. Jumping over to the bond account, last 3 months, 7.5% return. Year-to-date performance, 4.5%. Longer term, 3.8% return. There was some fluctuations in value, so for the most part, it is a fairly conservative allocation. All investment-grade bonds across that investment-grade credit spectrum, all corporate exposure, but a good mix across different industries. And there was a bit of a drawdown in the first quarter where even U.S. Treasuries suffered a drawdown, so real lack of liquidity, but fully recovered from that here in the second quarter and having pretty healthy year-to-date returns of 4.5%. I hope you're not getting too much background noise from the lawnmower. Again, fully invested, so 99.2% in those corporate bonds. Just a little bit of cash here in the account, but fully invested in those corporate bonds. We don't have a transaction table, but I can speak a little bit to some transactions. For the most part, we have been reinvesting bonds that have matured. KeyCorp has been a name that we've added to, so some more high-quality financial sectors where we are able to pick up some yield. We did proactively sell a couple of credits that were smaller positions in the account. Becton Dixon and then Plains American Pipeline were sold in the second quarter over just concerns of outlook and deteriorating credit quality, but really continuing to monitor the account and then also trying to reinvest where we can get yield but not take too much credit risk. We do list all of the bonds, so you can see a good mix of financials as well as industrial names, some healthcare as well. And then here is the maturity distribution. So largely, I think the longest we're going out is 10 years, but also having bonds maturing here in the near term. If interest rates were to rise, we would have ample opportunity to be able to reinvest in those higher rates. And then also our duration is not so long that would be negatively impacted or significant impairment if interest rates were to rise. Here, I think, is maybe the most discouraging part of this, is the yield to maturity is only 1.5% at this point. The coupon rate is still 4%, so you are getting attractive coupons, but the bonds are trading at a premium, and as a result, the yield has dropped significantly along with treasuries, right at 1.5%. So, that is likely, as we hold these bonds to maturity, what we will earn in the account over that period. You can see the credit ratings, all investment grade, in a mix of A to down to BBB. That covers what I wanted to present. Here is that supplemental index information and a little bit more detail on some of the individual funds. And this, I think, is where we can add that corporate bond index for your future reference. With that, happy to answer any questions. Oh, one other thing I wanted to mention, and unfortunately I think I just stopped sharing. Let's see if I can bring that back up. So we recently made a fund change in our model accounts that there was some overlap with the pension account, and wanted to just point out. We have sold out of Vanguard International Explorer and added a new fund, which we included a fact sheet for. It is a this fund here, excuse me, Virtus KAR International. Unlike Vanguard, this is a very active, very concentrated strategy that only owns about 50 small companies in the international space. They are somewhat more growth oriented, have had very strong performance, really focused on companies that have very strong competitive advantages. Primarily, a lot of companies like a sort of the international version of like a Zillow, sort of real estate data aggregator type names are where they really focus on. But we did sell out of Vanguard International Explorer. That has been a long-term holding. The benefits of Vanguard International Explorer is that it is extremely low cost, and this fund is somewhat more expensive in terms of the expense ratio. We would be able to offer you the lowest share class, R6 share class, but I believe this expense ratio, is right about 1.2%, almost, I think, double what the Vanguard International Explorer is. So there is a bit of a fee difference, and this isn't as broadly diversified of a fund as the Vanguard, but something we thought we'd bring up. Vanguard International Explorer has done well over the long term, over your holding period, but it has struggled a bit here over the past 2 years. Vanguard uses a multi-manager approach in that fund, and there has been some turnover in the fund managers that they're using for that strategy. So we as Busey, did elect to look for other options and decided to move into this fund, and just thought we'd present that for your consideration as well, because you are a holder of that Vanguard International strategy. So did want to point that out. It may, there is a bit of an expense difference. It is a bit of a different type of fund in that it is a little more concentrated and less broadly diversified. I will say, personally in the fund research, there's certainly really no immediate concerns, no long-term concerns for that International Explorer fund if you were to choose to continue to hold it. In fact, it has recovered here nicely here in the past quarter, but did want to point out that it is a name that we have moved out of in a lot of client accounts. And that is all I was looking to cover. Happy to answer any questions. I think the two things for the committee or the board to consider is potentially a rebalance, and then potentially that Vanguard International Explorer fund and making a change there. Richard, I believe you're on mute.
Okay, there we are. Okay, sorry, that took me a minute. Brian, I notice also that in new business, we're going to talk about the potential modification of the investment policy. So I wonder whether we should talk with that as well as what Tad has suggested, and partly just so we can have his opinion on any modification aside from the ones he has suggested. So Brian, if you think that's okay, I would, I don't know if you want to have a vote on that, but I think it would make sense to do it all together at once.
Yeah, I agree. Dobie, is that something that we can do is move that forward and probably take a vote to make it
Sure.
a modification of that.
Yeah, just move to, have that considered out of order, whatever.
Okay, we'll take a vote to move the investment strategy forward, and we'll take a roll call vote. Brian Hoff votes yes.
Richard, yes.
Josh Ingold, yes.
Elizabeth Hannon, yes.
Richard, yes.
That's a yes.
Just a quick clarification, just for my purposes. How long have we been in the Vanguard International? And let's start with that. How long have we been in that Vanguard International?
I can try to look.
Sorry.
I can try to look it up, but it likely. I've been with Busey for 9 years, and it likely predates that. So I don't know the exact date. I can try to look it up here. I do have the account open.
So we've got a pretty strong history with that particular fund.
Yeah, and over the, when you look at the entire life of the fund, it has performed well in that category. And then, its fee advantage over other funds is sort of undeniable. It is one of the lowest cost active funds available in that space.
Brian, Richard, and Elizabeth, my thinking is that the state getting ready to take over all of our investments and assets sort of makes normal thinking for me kind of out the window. Normally I'd be thinking about rebalancing and change the best funds, but do we have any more information about how they plan to do this and when they plan to do this?
No. No requests have been made of any board, fire pension board, and they're a little head of police from what I understand in terms of getting all their trustees appointed, and then they got an election coming up at the end of the year to, candidates from wherever who's going to be on these. So I don't see that happening soon. By soon, I mean by next quarter or by the end of the year, maybe even. I would be surprised if it happens in 2020, but 2021, I don't know. No clue.
I'd have to go back to that meeting and go to the leads, because they did have a certain date that they were trying to push things by. So I kind of agree with Ron. If we start shuffling and doing this and getting out of one fund that actually you're still saying was good and has a lower cost and everything else, and all of a sudden we jump in one, then have to jump back out compared to the state doesn't have their stuff together. Okay, we're spending more than we're worth trying to do stuff to manage something that the state's going to take. So until they clarify that with us, but my understanding from that one class they were trying to present, which it was kind of still off kilter, they had some goals and they had some things in mind, and we'll have to go back and reach out to them to get that answer again.
Well, I would tell you that it has to be done no later than June of 2022.
Yeah.
But it's my understanding right now that the board's focusing on elections and gathering data for those members who can cast a ballot. And the elections have to be done by the end of the year for the elected board to be seated in January.
Correct.
So,
and I don't know, is that worth our time to look at that and take that fund and do all the costing in that, even if it's 2022? What are we recouping to pair our loss to compare to the overall cost? Is that worth us jumping in and out?
And that's kind of what my thoughts are, is the Vanguard fund is traditionally a pretty low fee, and its volatility is pretty low as well. And as far as our changing back and forth I mean, Thaddeus, you could probably speak to it, but there's probably not much to gain with the uncertainty of the time.
I mean, Thaddeus, you said it recovered. Did it recover to the point that it's staying there and you trust it for another year? Or is this something that's a major flaw and you think it's going to cost us big time?
Yeah, so we were somewhat hesitant to even bring it up because we know there is a transition date sometime in the near future. There is no immediate concern. I guess the management of that fund is still sound. Sometimes we do have like a fund where the manager who led it, left or departed, suddenly, and then there is an immediate concern. Like, this new person coming in is going to do things completely different. We really have no track record to base anything on. So that certainly is not the case in this fund. But longer term, we think we have a better longer term opportunity in this fund that we selected. The other element of it is it does complement our other investments better than potentially this Vanguard fund.
So are you saying with the Vanguard fund we overlap too many?
So for you, because it is your international small primary investment, it is actually somewhat better that it's broad. I think we just want to be, transparent and let you know that, we have made fund changes. I think if you didn't have this pending change, we would somewhat recommend making a change, not necessarily, it wouldn't have to be to Virtus, but probably exiting that fund would make sense. But at this point, is it worthwhile to change it to make sure, to have to really do a lot of due diligence on this new fund? I will say just right off the bat, this fund is a little different and it's more concentrated. So the performance can vary more than Vanguard. Vanguard it's spread out across 3 managers, so they have hundreds of holdings. So much more broad in terms of its diversification. And so that's, I certainly would recognize that, it may not be worth the hassle of transitioning. I will point out there is no transaction cost, so you would exit the fund on at the end of the day, the closing price of that, and then you would immediately be in the new fund if you were to decide to go forward. So there is no transaction cost that would impact it. That's included in your custodial fees. So that isn't necessarily an issue, but I also don't think it's particularly, we're not selling out of Vanguard because it's a bad fund. I'll put it that way. We sold out of it because we found a better alternative that we think will serve our clients well. I don't know if that helps.
I
I think
helps.
it does. Yeah, I think it does. I think just that expense ratio and that being, you said double?
Yes,
To
and
jump
that's,
in
that's.
and is that something we want to do right now, or is that maybe something because we know there's an end result that's going to the state?
Yeah,
And
I think we're safer. And I mean, if you guys it sounds like we're kind of the same opinion. I think we can take immediate action on this if everyone feels comfortable with that. I don't know if everyone would feel good with just sticking with what we have with the Vanguard. I think we have been with it a long time. It's a lower income, less expense ratio, and with the pending transfer, which again, date unknown, I don't know that there would be much regard to do that. So is everyone comfortable with that, taking action and just staying put with the Vanguard?
So what you're saying, Brian, is not taking any action.
Correct. Well,
Correct.
yeah.
Okay.
Taking action by not taking any action. Correct.
Yeah, I'm okay with that.
Okay. So we can
that's
give
good
the-
with it. Anybody else?
I
why
agree.
don't we do a roll call and I'll make a motion to take no action with the Vanguard, keep our fund with the
No, wait,
Vanguard,
what? How did you state that?
to
Restate
take
that.
no action as far as changing our current status with the Vanguard International.
But so I guess what? We don't need to vote if we're not doing anything.
Yeah.
I mean, if there's
No, you don't.
no motion and we don't vote
Oh.
on it, then it just stays as it is.
Wasn't sure. Okay.
Yeah.
Kay had mentioned just anytime we're doing any kind of action, I just wasn't sure if that was considered an action because we were voting something with the investment. So that's fine.
Well, maybe Dobie can let us know, but I think we're doing nothing.
I think you're right, Elizabeth. Yeah, don't need to do anything. Just leave it as it is. You discussed it, but you decided not to take any action.
Okay, perfect. Thank you. Thank you.
Sure.
I agree with the Vanguard, but also we talked about rebalancing our funds, and I would have a first to say we should do that.
Okay, rebalance.
Richard, I agree. The rebalancing thing to me is much more critical. I sure wish we had a little more information, but correct me if I'm wrong, Thad, but if we do rebalance, we basically would be taking the gains that we've occurred on some of those really stocks that have gone very well, and we'd be going ahead and claiming those gains if we rebalance. And that to me is probably worthwhile.
Yeah, there has been some, not so much this year, but over the past several years, different areas of the market have performed differently, and things have deviated, and it amounts to exactly that. You're trimming or reducing things that have had excess performance, and you're reinvesting them in things that have lagged a little bit. So it is selling high and buying low. In a very thoughtful way.
Richard, do you want to make a motion to do the rebalance?
Yes. I recommend that we rebalance.
I'll second that motion. Brian Hoff seconds. We'll need to do a roll call, and I'm actually stepping out for this call.
Are you leaving?
Yes.
Josh,
All right,
you taking over?
Yeah, I got it. We can go ahead and do a roll call for the motion.
So can we be a little more specific just for me? Specifically, we're saying rebalance to align with our investment policy.
Yeah, Thad, can you go back? I hate to do this, but is it possible to show that one slide that showed the policy and the actual?
Yes, and before we transact, we'll want to confirm that those numbers are what they should be. But yeah, give me 1 second, and I should be able to bring that back up.
Yeah, there we go.
Yeah, so it would be reducing this index allocation, increasing, excuse me, international, and so the active equity, we will target it to an appropriate balance between the funds, and make sure that those are sort of within that target threshold. I think there is not sure if it was on that supplemental sheet, but I think there may be some little bit more. I don't think the policy weights are here, but that is one thing we may want to confirm if there is more detailed information about the policy. We'll just double check that. I know we have it in our records.
Okay. Do we have enough information to move forward with the motion?
Let me try this. I recommend that we rebalance our funds to our investment policy.
Yeah, that would be enough information for us to generate a proposal and actually execute the trades. It doesn't, for example, I guess the only discretion would be around, for example, the target is 39% in active equity. So we would have some discretion around how to weight the particular funds. And I will work with our implementation group or our trading group to determine the appropriate balance among those funds. Alternatively, we can generate a proposal and tell you, exactly what trades we are proposing if the committee wants to approve that.
Yeah, so I think the problem is we're not probably going to meet for 3 more months. So
Yeah.
I'll second Richard's motion to have Busey rebalance the portfolio to be consistent with our investment policy.
Okay, let's do a roll call then. Josh Ingold is yes.
Claps, yes.
Hannon, yes.
Richard, yes.
Just make sure you note in the minutes that Brian had to leave the meeting about approximately what time.
Yeah.
Okay. And then we still need a motion to accept and file the BC quarterly report as well.
So moved.
Clap, second.
All right, we'll have to do a roll call again. Josh Ingold, yes.
Yeah. Okay.
Elizabeth Hannon, yes.
Richard.
Richard, yes.
Clap, yes.
Mark. Okay.
All right, thank you very much, Busey.
My pleasure.
Okay, we'll move on to approval of the minutes from the previous meeting.
Should I exit the meeting?
You're welcome to hang around if you want to
Yeah.
see it.
Go get that lawn mowed.
Yeah.
All right. Well, thank you very much for having us.
Thanks.
Thank you.
Thanks, Thaddeus.
Bye-bye.
So I'll make a motion to approve the minutes of the April 24th, 2020 meeting.
Clap,
I'll second.
You got it, Josh?
Yeah, that's fine. Ingold, second. Roll call. Ingold, yes.
Hannon, yes.
Richard, yes.
Clap, yes.
All right. And then we'll move on to public input. Is there any public input? Okay.
Didn't get any.
Okay, thank you very much. All right, to unfinished business.
Did we do item 4? I missed that.
Oh, no, we didn't. Thank you very much. Approval of the quarterly financial report and pension benefit changes.
Okay, I've got sent out to everyone, I think. Jim, I apologize. I probably didn't send it to you. I didn't realize you were going to be at the meeting, but I don't have a whole lot to say about our quarterly financial report. There was really no, I do want to talk though about our annual financial report at the same time, which I had also sent out. And that I think is a lot more important information. There really was not a lot that occurred unusual in the way of unusual events during this last quarter. We did get our first property tax payment in June. And as far as benefit changes, you know, Ron Short, of course, passed away in June with a spouse. So he switched his from a regular service pension to a dependent pension. And the changes in the next quarter, this quarter coming, we had two changes here in July, one of which I forgot to put on, but I recalled that Chad Hinch had retired and draw his first payment in July, full payment, since he retired on June 30th, and he's old enough. David Wisher had retired earlier, and he reached the age of 50 in the middle of July, so he will receive a prorated in July and then a full service pension in August. So I don't know if there are any other questions. Somebody has any other questions about our quarterly financial report, I will be happy to try to answer them, or they can send them to me later. I just wasn't going to spend a lot of time on this because I do want to talk about the other report in more detail.
Ron, did you have Derek Odell retiring as well? He's just going to be on a deferred status for about a year.
Yes, I do. I've got Derek Odell down there, and yeah, you're right. He won't draw for a while because of the age.
Sure. All right. Just want to make sure you had it.
We'll talk a little bit. I'm going to talk a little bit more about some of our deferred pensioners on this other report. So.
Okay. Very good.
I'm going to go ahead then and talk about our annual financial report for our fiscal year for the whole 12 months ended June 30th. You know, we had probably most of us would agree, a halfway decent year. Our fund balance increased about $708,000. So that sounds, you know, given what we know about the world now, I mean, that sounds like a halfway decent year, 1.4% increase. But in reality, and looking back at, you know, the last 15 years, it's the second lowest increase we've had. We had a lower increase in 2016 when we had the big drop, the big adjustment in the stock market. And that was like a $500,000 increase. So this was $700,000. So I guess I'm going to temper that by saying it seems like it was a halfway decent year, but maybe not really when we look at it with the actual numbers. When I get finished here, Elizabeth, I remind you, I'm going to ask you to talk a little bit more about a general financial condition of the city and what impact that may have on our future funding, and as well the impact that Carl's exemption has on our funding. But I'm going to go ahead with my report now. Our total return, investment return last year was 4.3%. It was 5.5% from our fixed, and we had a number of gains on those corporate bonds and those, especially the government bonds. We had a number of market gains. They increased in value considerably. Now I look at that, it's kind of funny too, because if we don't sell those and take those gains, even if we do sell them and take those gains, we have to turn around and invest them in something that's paying, you know, 1/10 of 1%. So we're going to give those gains probably back. And so the interest rate we're in was not great. We had a 3.8% return on the equities. So we had a total of 4.3. When you look at the last 10 years, our total return is 7.8%. That's fixed and equities. So that beats the actuarial assumption of 7.0%. So that's good information. And I mentioned already the Fidelity Contra Fund was a super performer last year, almost 17.5%. I'm going to skip down and talk a little bit about our pensioners and changes. The only change we had last year in our disability pensions was the death of Larry Bundy, and he had no dependents, so that dropped off. The last disability pension that awarded was to Dwayne Bishop back in 2005. So it's been 15 years since we had a disability pension awarded. There was a net increase of one service pension last year. We had the death of Ron Short at age 74. He had a spouse, but we had two retirements. We had Bill Morphy, retired at the age of 59 with 26 years service, and Chad Hinch, retired at the age of 50 with 24 years service. Now, I did not include Derek in there or any of the other deferreds because until I don't consider them actually, they're not really drawing benefits, drawing a pension until they reach the lawful age to do that. So, there was an increase of the one dependent I mentioned. There are two retirees that are currently in what I call a deferred status. They've repurchased service time. One of them is Mick Humer. He bought back his time, and he's eligible to draw benefits he was eligible to draw benefits in August of 2013. And he, of course, has not applied yet for that. I presume he's still at normal, so he probably would be one of those joint pensions of both drawing from us a small amount and normal a larger amount. And Mike Ashby is another one that's in the same situation. And he was eligible to draw benefits in April of 2025. There are some other people, three other employees that are no longer working for the fire department, but are vested in our pension fund. So they are in a deferred status as well. Tony Foster is one, and he will be eligible to draw. They have to be age 60. He'll be eligible to draw October of 2031. He'll have 15 years of service. Chad Kingren, he'll be eligible to draw in May of 2037 with 15 years of service. And Derek, we mentioned, he'll be eligible to draw in September of 2021, and he'll have 23 years of service. Last year, we did have two refunds of contributions that we paid back to employees that quit and requested that. One was Rhonda Foster, and that was $67,129. We paid that to her in July. And Travis Crow, we paid $15,800 and some dollars in October. Travis Crow was someone that had left earlier, but for some reason had not requested that withdraw their contributions. And I think either Josh or someone contacted him, and he finally did that. In last year, we had 4 new firefighters that were hired and went into our pension fund, and their ages were 30, 36, 24, and 29. And then the last 18 years, the average age of our current firefighters has gone up from 36 to 41. We have a workforce that we're hiring older, and they're working a little longer. And the average years of service increased from 8.3 years to 12.2 years. Let me see. We have 57 active firefighters, and 35 are under Tier 1, and 22 are under Tier 2. So Tier 2's, of course, slowly catching up. And I think that's about all I was going to say about that. Certainly, I think this report, you should keep this report on file because it does have a lot of good information. You can go back and find out when people dates, amounts, and things like that. So I'd answer any questions someone has on it.
Ron, I'd just like to say that I read the document you gave, and as you said, a very lot of information. So thank you very much for doing that.
Well,
Just need a motion to receive and file it if that's what you want to do.
I have a question. So Ron, on this report, when you're counting active firefighters, are you counting anybody who was active during the year?
no, these would be people that are active as of June 30th of 2020.
Okay.
And Elizabeth, I don't know if you want to do that now or a little bit later, but I really had those two questions I was hoping you would help us a little bit on.
So give me your questions again, because we've talked about several things since then.
Yeah, in general, I know the city is under incredible financial pressures, and I just wondered if there's been any discussions about what impact those pressures might have on our future funding or our agreement that we had about funding levels.
Yeah, so our current best guess is that in FY21 we'll be about $3 million short of our revenue goal for the general fund, but we're obviously, everything has been changing pretty rapidly with the pandemic. So we're just in July, we got our sales tax revenue from April, which is really the first full month after the governor's stay-at-home order. So we're still evaluating that. But the plan is in September, we're going to go back to the city council with an updated forecast. We do have what I'll call kind of a soft hiring freeze now where we can. We're trying to hold positions open because we're anticipating that we may have to reduce staffing to balance the budget. And obviously, if we have open positions and we can eliminate those positions rather than affecting current employees, that would be better. So, it's a little hard to say at this point. However, when we came up with this new transition plan for pension funding, I did have the city council approve that as part of our financial policies. So if I'm remembering correctly, this tax levy in the fall will be the third year of that 5-year transition period. I'm pretty sure I got the number of years right. And so their policy says that we're going to follow that transition plan. So the recommendations that I would make to them would be consistent with that policy. That's not to say that they're always going to agree with me. But when we bring the tax levy, what I plan to recommend is, the number that's in the transition plan. And, could they do something different? Absolutely. They could adopt a different tax levy. They could reduce the levies for both of the pension funds as long as they don't go below the state minimum. But I don't, at this point, I don't see that we'll even be putting that out there as an alternative for them. And I haven't discussed it with the mayor very recently, but I don't think she would be interested in putting that out there as an option. Having said that, I don't know how bad it's going to get, right? I mean, a big part of this is that is not just how much our revenue is going to fall, but for how long is that going to last? And it's hard to say at this point. I think the longer, initially we thought it could be a pretty short impact, but the longer it goes on, the more I think I'm starting to question, when are we really going to see a full recovery? And I think a lot of that has to do with when we have a vaccine and that get that distributed to people. And I don't think at this point anybody can answer that question.
Well, that's helpful. That's good information. It's still your goal and intention of nothing's changed there. I did notice though, you know, the actuary kind of warned us in his preliminary numbers that a lot of the funds, you know, a lot of the cities were struggling and the funds were struggling, and so their levy amounts were going up. Now, I would hope that ours is better off, I think, especially the fire, better off than a lot of funds. So that may not be that big a deal for us.
Well,
My other question, go ahead.
Well, I was going to say, I mean, I think we're very well funded relative to a lot of pension funds. I mean, no, we're not 90 or 100%, but we're still better off than probably the vast majority of pension funds in Illinois.
I'd agree with that. So, of course, we also, you know, a little bit on the negative, we know that those contributions are going to go up in the future. So it's going to be tougher and tougher. My other question, go ahead.
Sorry, I was just going to say, to clarify, so that whole transition plan, it has been built into our financial forecast all along from the beginning once we made that decision and adopted the policy. So, you know, when we talk about a shortfall, we don't have to add to that the additional pension funding that's already been built into our financial planning.
Yeah, I guess that would be right, as long as the city is willing to continue to fund the pension funds at those amounts that they had planned on, which might mean that if overall revenues are you know, out of sight negative, then the general fund, I guess, has to bear the brunt of it. And so,
Right. I mean, it's a direct impact on the general fund. I mean, there are other funds affected, but the one we're most concerned about is the general fund. So, and as I said, I can't predict what the city council will do. You know, I just make recommendations.
my other question was more specific, was the impact of the Carl question, and what it actually does to the amounts of money that the pension funds receive.
Absolutely nothing. I mean, so we weren't ever counting on getting that money. At least not since I've been at the city. We haven't, you know, in any financial forecast, assumed that would happen. And so, you know, we had that the property tax revenue that was disputed set aside in a reserve fund. And so when this recent judgment came, we made a large payment to the county out of the reserve fund, and then they did the payments back to Carl from there. But I don't see any direct relationship.
Okay, well then maybe I've got some wrong information then, because when I was doing our books, I look at the levy. I saw the amount that was levied was according to the actuarial plan. But when we actually received the money, we only received about 93% of that amount. Now, normally, past years, we'd get 99.5, or 99.9% of that money. It's always a small amount of money that is being held. Is something wrong there? Did the payment not get made, or?
Well, so we're just starting to work on our work papers for the audit. So we'll take a closer look at that. But as I think you all know, there have been some irregular things happening in the county treasurer's office. So my initial guess would probably be it's a timing thing with the property tax distributions. But that the decision about Carl shouldn't have had anything to do with our property tax revenues for that tax levy. That was a payment that we made to them from reserves.
Okay, so when you levied the amount that was like in the actual report, you expected to get that amount?
Yeah, correct. Because we normally do, or pretty darn close. Yeah.
Okay, well, I will send you those work papers the reason I jumped out was both police and fire were exactly the same percentage, exactly. So.
Yeah. Again, I'm going to say my guess is it has to do with probably timing of how payments are getting distributed in the treasurer's office, but we have to do our own work papers on that anyhow, so we'll be taking a look at it.
All right. I'll send that
It
to you.
remains to be seen whether the treasurer's office will ever get sorted out.
Correct. My understanding is like they still haven't completed their audit for
Last year.
2018.
Yeah.
And part of that is because they haven't done bank reconciliations for a very long period of time.
And they may not be able to do them because a lot of the documentation is gone. So who knows? Hard.
Yeah.
Well, thank you, Elizabeth. And if there are no further questions, someone would make a motion to approve both of these reports, I would appreciate it.
I'll make a motion to approve the quarterly and annual reports from Ron.
And I'll second that. By the way, I'm back.
Roll call. Elizabeth,
Hannon, yes.
Off, yes.
Ingold, yes.
Richard, yes.
Clap, yes.
Josh, you may have to help me out or clap wherever we left off.
Josh, you gonna give it back to Brian, or you gonna keep it?
You can just keep it if you want to keep fluid.
No, you're okay, Brian. No, we just finished. We did public input out of turn, but we are to unfinished business, number 6.
Okay. And the unfinished business, we've got the approval of the operating procedures for the pension fund. I think Josh was working on that, and we had some stuff going to Adobe.
Yeah, I think I tried to send out, I don't know how successful I was, another draft with the changes that had been suggested with respect to section 214A6, inserting a review of the investment policy on the agenda for every meeting, which I think is fiduciarily sound. Of course, you may not have to do it after another year or two, but that's fine. And then the second amendment, if I recall correctly, related to the per diem rate for meals when you're attending conferences or whatever, and it was to make it the IRS rate. And that way you don't have to do it every meeting and it's already determined. So
The IRS rate or the federal reimbursement rate?
Well, I put IRS rate in there. We can make it the federal reimbursement rate, either one. I don't care.
Yeah, because I don't think the rates that federal employees get reimbursed, that doesn't get determined by the IRS. It gets determined by Central Management Services. They have a really nice website, which makes it easy to find. But I think like a long time ago, like 6-9 months ago, I had a couple
Probably
of
longer
other
than that.
changes. Well, I know I had a couple of other changes, and I don't remember off the top of my head what those were. So, I mean, we can.
Well, let me suggest this. I'll reword that so that is the federal reimbursement rate. And I know you're really busy now, but if it comes to you, send me what those thoughts were, and we can have them for the next meeting or whatever.
Okay. Yeah, and if we sent out a new draft, I don't remember seeing it, but it has been a little crazy.
I would also say, when I was kind of looking at this again, with all the stuff that's going on with Open Meetings Act, given the current environment and whatnot, I was thinking, well, maybe we need to change some of the language in here, but I don't think so. We're still in compliance. It's kind of general. It always refers to the act as such, as opposed to a specific type of thing. So I'm going to look at that again too, just to make sure we're kind of current with the amendments and with governor's proclamation kind of stuff. So
yeah, who knows when we're going to meet face to face again?
I know.
And Elizabeth, do you have anything, and Adobe might too, that can help facilitate, other than obviously the Open Meetings Act, but something that's more correlated to when we're recording these sessions, if there's any topics or subjects that are to be brought up? And is there a closed session portion or anything that would be information sensitive that we would need to know offhand, or is there like a breakout sheet for?
So
for
I
that?
mean, I'm not sure exactly what you're asking, man. I think the OMA training that we've all had to do
Yep.
through the state kind of covers those issues.
Okay.
Yeah, I think we're good there. So if that's all right with everybody, I'll and make that change regarding the federal reimbursement rate. And then if anybody has any other suggestions about those, I know it's been a while since we looked at them all, please get them to me and see if we can't get those incorporated there.
Okay. And you said you were going to send out a draft. I apologize. I'm writing this down here. Sorry.
Yes, I will send out a draft to everybody. And
Okay.
I think, Mark, you may be the only guy I don't have an email address for, but I'll get that. And we'll go from there.
Okay, perfect. Moving on to 6B, the state pension consolidation discussion. You guys may have moved this up, if that's correct.
We kind of already talked a little bit about that, trying to ascertain what's going on. And as we're always probably the last ones to know, the only thing that's certain is there's going to be an election by the end of the year. I would be surprised if they ask anybody for your money before the end of the year, but I've been surprised before.
Okay, and along with the election, I did receive a follow-up email through Lauterbach and Ammon asking about the participants for the election. I know that we were kind of going back and forth on email. Josh had talked with Carla, if that's correct, and she had just was missing a few of the retirees. I think I was able to track down 2 or 3 of their information. The deadline for submitting that is today. Does anybody know the status of that or where it would reside?
So I think, I was going to say, I think Carla was working on it, but I think the big piece that we were missing was deferred pensioners. So if we don't know where they are, I don't know how we, and you guys have tried, I don't know how we solve that problem.
We got Carla all of them. As of yesterday, she has got all of the deferred pensioners as well.
Okay, so we should be on task. I wasn't sure if you were able to get the last remaining, so it sounds like you did. That's awesome. And is Carla following up with Lauterbach and Ammon direct? Is that coming back through me? They had just emailed me and inquired if we needed additional time.
I believe she was going to, but
Okay.
if you might just forward that email to her to confirm.
Okay. Great.
And the other thing she and I talked about was, we have all the current employees in the Munis system. We have all the pensioners in the Munis system. So I think when we collected that information on the deferred pensioners, we were going to also add that information into the system. Not that we can necessarily keep up every time they move, but we'll have it, and then we just make them active as pensioners when the time comes to do that. So at least we'll have a pretty complete list in there.
Sounds good. And we can probably put together a little letter that now that we have the deferred pensioners address to let them know it's, it behoove them to notify us of any address change.
Yeah. And then if once we have that information in the system, we can always pull it down and create a mailing list from that. So.
Okay, perfect. I'll work on a letter to draft to them and get it sent to all our deferred pensioners. We don't have that many, so. Okay, moving on to item C, Larry Bundy death date, October 2019 pension payment. Josh, I know you were handling that.
Yeah, I still haven't heard anything. I will check in with them again, and hopefully they have gotten a death certificate, and we can get it cleared up and get a refund if that, depending on when they decided that he had passed. So, but I don't have anything new as of yet. But hopefully before next meeting I can.
Okay, we'll leave that as unfinished business then for now. And Moving on to the chief loss reciprocity, I actually have the letter, and I can file that with Josh if anyone needs to see it, that Chief Loss will not be pursuing reciprocity for pension benefits at the time of his retirement. And so I do have the official letter that we can file with his folder.
You should have a motion then to receive and file that letter, so it's part of the minutes as well.
Okay. A motion to file Chief Loss's reciprocity, declining of his reciprocity letter.
Ingold will second that.
And do a roll call. Or no?
Yes, you do.
Off, yes.
Ingold, yes.
Hannon, yes.
Richard, yes.
Clap, yes.
Hey, just for clarification, and maybe Dobie can comment on this. My understanding is that the emergency order that allows us to meet online requires every vote to be a roll call. Is that right?
That is correct.
Okay.
All right. Moving on to new business. We kind of covered this with the potential modification of the investment policy. Was there anything else that we need to cover in that? We did move that up. Seeing none, we'll move on to the engagement letter for the fund actuary for Lauterbach and Ammon, June 30th through the June 30th of 2022. Elizabeth, I imagine, is this your portion here?
It could be me, it could be Ron. So
Okay. Wasn't sure.
Yeah, part of the arrangement when we decided to have city staff start doing the payroll work for the pension fund was that in order for me to make that work within my finance department budget was to have the pension fund pick up the actuarial services. So they've sent us an engagement letter and we need to approve it. That's all. Ron, did I miss anything?
I don't know, have anything to add. I mean, you know, it to me, it's really kind of a moot thing. The city's going to end up paying for the actuarial report in the long run, no matter what. So, but if it helps you budget-wise in the short term, then that's no big deal. I have a question, though, kind of related along that line. I'll just bring it up here. You know, we currently pay Carla $300 a month for her services, and we pay Kay, or now April, for their doing the minutes. Has that changed?
Yes.
Okay.
Right. So Carla's now officially retired from the city, but she's on the finance department payroll as a quarter-time employee. So we should not be paying Carla from the pension fund anymore. We have an arrangement for the staff to do that work.
Okay. Fine. Thank you.
But April will.
Once I'm done, I won't be paid either.
Right, but April will be because she'll pick up that work, correct?
Yeah.
Okay, so I'll make a motion that we approve the engagement letter with Lauterbach and Ammon for actuarial services for the fiscal year 2020, 2021, and 2022.
Okay, I'll second that. And we'll do a roll call. Off, yes.
Ingold, yes.
Hannon, yes.
Do we have everyone there? I didn't hear.
Claps back, claps yes.
Richard, yes.
Okay. And moving on to new business, we'll try and get through this. Sorry. New hires. We've got Timothy Corral and Daniel Meyer. both tier 2 employees. Their hire date 6/15 of 2020. Josh, anything on those?
So they both, I don't have their physicals in front of me, but they both been filed and they both passed their physicals, and but nothing pressing. So they both passed. So that's all I have on that.
Okay. Make a motion to accept both new hires, Timothy Corral and Daniel Meyer.
Ingold will second that.
Okay, roll call. Hoff, yes.
Ingold, yes.
Richard, yes.
Hannon, yes.
Clap, yes.
Okay, next on the agenda would be retirements. We have Dave Wisher, Chad Hench, and Derek Odell. All of those have been calculated, filed, and have started retirement.
Hey, Brian, I've got all the information here, all the percents and stuff. I don't think anyone wants me to read all of those. Can I just send those? Can we approve it? And can I just send those then to April over email so that she can put them in the minutes? And I also kind of have a question, Elizabeth. What do you think about what information can we put in the minutes? I mean, I don't never have put their social security number, and I've never put their date of birth, but they've got, in the past, we've put their date of retirement, their rank, the years of service, what their final salary is, what their first pay raise is. So there is some personal information on people that is going in the minutes. How do you feel about that?
I feel okay about it because it's expenditure of public funds in part.
Right, but definitely no birth date, no social security number, because those could be used to compromise somebody's identity and apply for credit or something. But I think, retirement, the amount of the pension, that's not an issue.
I agree with that.
I put age and never put the social security number or the birth date, either one. So,
Great.
I think that's fine.
yeah.
Great.
Okay.
So
Okay.
what do you want me to do on this? To just send it to April over the email, or you don't want me to read all this stuff off? Do you?
Ron, I'm going to do these minutes. So, but you can send it to April and me both.
Okay, I'll send it to you. Sure.
Okay.
Yeah, that sounds great. Okay, making a motion to accept and receive retirees.
Ingold will second that.
Okay, roll call. Hoff, yes.
Ingold, yes.
Richard, yes.
Hannon, yes.
Clap, yes.
Okay, next quarterly meeting, unless anybody has anything else. Next quarterly meeting is set for Friday, October 30th of 2020. Make a motion to accept the next meeting or motion to adjourn.
You don't have to accept the meeting. It's already set.
Okay,
Yeah.
perfect.
I want to remind everybody, though, that they're recording now, and this will be on the meeting date in the meetings calendar for the city. So if you want to look back at the Zoom recording, you can see it there. As long as we're doing virtual meetings, they are required to record.
Thank you, Kay, and also thank you, Kay, for all of your service, your years of service. I know I mentioned it earlier, but we'll thank you once again and appreciate all your help and assistance, and know that you've been a huge help to the fund.
Yeah.
Yep. Thank you very much, Kay.
Okay, with that all being said, motion to adjourn the meeting.
Got the second? I got the second.
Okay, roll call. Hoff, yes.
Ingold, yes.
Richard, yes.
Hannon, yes.
Clap, yes.
All right. Thank you, everyone.
Thank you. Good meeting.
Thanks
Thank
for
you.
being